What is up, traders, and welcome back to the channel. Today we're diving into one of the most exciting yet confusing sectors of this market, and that is quantum computing. Companies like IonQ, Rigetti, D-Wave, and Quantum Computing Incorporated promised to revolutionize everything, but lately they've hit a wall. And as of November of this year, it has been very brutal for these stocks, marking a significant sell-off. So today we're breaking down the news and the drivers behind this massive drop. We'll also be looking at the charts and seeing what the options market is telling us about the future of this high risk and yet high reward space. Now, let's cover why the quantum sell-off is happening. Well, the most recent wave of selling isn't just due to one thing. It's a perfect storm of economic reality crashing into futuristic valuations. First of all, we have a reality check on the valuations, as these stocks soared at the beginning of the year with the mere promise of a quantum future, pushing their price-to-sales ratios to historically astronomical levels. Pretty much they were valued like mature tech giants, but with almost no revenue. And now investors are demanding proof of those future profits. We also have macroeconomic pressures, with the broader market is feeling the overall squeeze and ongoing fears of a recession and uncertainty around the Federal Reserve interest rate policy in December. Investors are looking to rotate out of the most speculative, highest risk assets, and quantum stocks are firmly in that category, and they're looking to transition into more safer assets. We also have the long-term commercial horizon. Now, high-profile tech leaders, including Nvidia CEO Jensen Huang and Meta CEO Mark Zuckerberg, have recently tempered expectations, suggesting that a very useful, quote-unquote, quantum computer is still 15 to 30 years away from widespread commercial use. This has profoundly dampened the first-mover advantage of the pure-play companies, extending the timeline for substantial investor returns. Compounding this, tech behemoths like Alphabet, Microsoft, and IBM are aggressively investing in their own quantum projects, creating competition that threatens to disrupt the smaller pure-play firms. As well, we have to take into consideration the investor sentiment. And despite the blood on the streets, the overall sentiment is still a bit of a paradox. Short-term sentiment is clearly bearish or cautious, as this is driven by the recent sell-offs and the sober realization that fault-tolerant quantum computing is not imminent, although the long-term optimism does remain strong, with many analysts and institutional investors still bullish on the technology itself. They point to a significant cash reserves that ensure a multi-year runway for R&D, and continuous technical milestones like IonQ's recent high-gate fidelity achievement, alongside strong revenue growth in some cases. It's still a conviction play on the future and not the present. So as we can see, we are on a daily chart of IonQ, and we're going to be analyzing this name not only on the daily, but we also be looking at the hourly and the 5-minute to get a full picture on this name. So let's get started. We can see here that obviously still the market cap is at around $17 billion, although the company is not profitable yet. They actually lost more money this quarter, here Q3 of 2025, compared to the last quarter of Q2 2025, where they actually lost around 70 cents. This quarter was pretty bad, being at around $3.58 here. So they're not profitable yet. They have very high market cap here, obviously, because there's no commercialization yet of these quantum overall here computers. We look here at the revenue, their income statement, just declining over time. Just that last quarter was just very, very bad here. We look at the annual, look at the quarterly. This is probably the biggest loss that they've seen. Revenue came in at around actually 39 million. Net income came in at negative 1.05 billion. So they did not make any money at all. Also, their net profit margins are declining, and that is not looking too good here for the company. Although the stock here is up 19% year to date, it's actually outperforming the market by a little bit of a percentage point here. Technical saying it's a neutral, but a lot of analyst ratings are saying that it's a buy, with the 1-year price target being at around $72, which would be around 47% here upside from the current levels. Now, let's look here at the chart, right? So we see that our custom algo is still, labeled as green. So pretty much what this says is that the buyers are fully in control. Prior to this, the sellers were in control, but the exact date was the 30th of May, but obviously that was a long time ago. So right now we should still be pretty much biased towards the longer side, just like the general market. Pretty much we saw these sell-offs because there was a lot of concerns with the valuations of the market. But looking here at this stock, we did see a decline here pretty heavy from around the highs of around 54%. We found that low. Now, this can all be explained by the RSI momentum here. If we look here at the RSI momentum, we can see that the stocks did see a very nice momentum move since the 20th of August all the way towards the highs. And it was exactly at this point here that the RSI at the bottom started to tell us that this stock was pretty much overbought and that it was just a matter of time before we would see a decline. We can see that during this time, the RSI fell below and continued to be below the overall 14 SMA, right, or simple moving average. And up until now, we found a base and we saw the RSI finally break above this 14-day SMA, saying that overall there is potential for an upside bounce here. And also something that is going to prove that level and that confluence is if we zoom in here, we bounced and found support exactly at this red line. Now, many of you guys may be asking what this red line is, and that is going to be the year-to-date anchored VWAP, or the average entry price of the market participants since the beginning of the year, so the 2nd of January of 2025 here. And we saw this important hammer candle that came in, showing that a lot of buyers are coming at these lower prices, and that is we've been seeing the bid here from $41 low all the way towards $50 here on IonQ, with the RSI also showing that upside momentum here. We are still below the 50 MA, but something I would like to see over the next coming days would be something like this. So if we are going to trigger the upside momentum, would be something like this: rejection short term of the 50 MA, keep going towards the upside, short term decline, and then have that formation of higher highs and higher lows, finally breaking above this area of resistance of around $57, which would be this overall high of the swing high anchored VWAP. Something that we can also do here is, to really gauge the momentum and see where the sellers are in control is by using this indicator called the fixed range volume profile. So simply we'll select it, we'll use from the top all the way to the current price action and see that this point of control, this white line, I will mark it as red, is going to be our point of control, or POC abbreviation, showing that as long as we get above $60.43, the buyers are going to be in control and we should enter our position. Pretty much that would be our entry at a break above this level. And we would hold all the way toward our price target of around $114.48. So to be more precise, around $115 here. But although anything could happen, we could see, instead of an upside momentum, a rejection of this level, because you never know. We have to take into account the bearish thesis. So we may see something like this. We try to break above it, a lower high, form something like this, and then that overall rejection like that, right? And then we continue to see the sell-off. But so far, it is looking like we are finding that support based off this hammer candle. And so we'll put that there as support 1. And because the RSI is finally bouncing, it double bottomed here, and now finally back above this 14 SMA here on IonQ. So as long as this level holds around low of $40, entry would be a break above $60, pretty much we'll say that, and we'll hold all the way towards our price target of around $115 here on IonQ. So after this analysis, you may be asking yourself, what's the key takeaway? Well, the quantum sector is going through a necessary, painful correction. The short term is dictated by the realities of interest rates and skeptical commercial timelines, and the longer term remains a high conviction bet on a revolutionary technology. Now, the options market, especially for IonQ, reflects this tug of war, being neutral on the daily volume, but slightly bearish on the longer term open interest. Now, for investors, this sector remains highly speculative, and it's an area for a small, high-risk allocation only if you have a 5 to 10 year time horizon and a strong belief in the eventual commercialization of quantum power. So what do you think? Are you buying the dip in quantum or waiting for a clearer signal? Let me know down in the comment sections below. Don't forget to like and subscribe to the channel for more deep dives into the future of tech and finance. And remember, don't let the markets whip you guys out. I'll see you guys on the next one.